We need to talk about Tesla's Q1 production and delivery numbers. You've probably seen them already, but if you have not, these are the numbers right now. They produced 433,371 vehicles, which was better than expected, but the big disaster here was deliveries. Deliveries came in way below analyst consensus, way below my expectations as well. They came in at 386,810. Now, in previous quarters, we had quarters where production was higher than deliveries, but only about 2 to 3% or so. This time it's closer to around 11%. Now, Tesla themselves, they say here that the decline in volumes was partially due to the early phase of the production ramp of the updated Model 3 at our Fremont factory and factory shutdowns resulting from shipping diversions caused by the Red Sea conflict and an arson attack at Gigafactory Berlin. Now, to me, only two of the, let's say, explanations here can explain a reduction in production, but not a huge miss like this in deliveries. Yes, deliveries do get affected because of the Red Sea conflict, but I don't really see how deliveries should get affected by the other two explanations here. Maybe a little bit, but it shouldn't really have such a big impact. And like I said, last quarter, we had the same thing. Deliveries was lower than production, so they could have used a bit of the overproduction of last quarter for the deliveries of this one. Could very well be. Again, we're probably going to get way more answers in the earnings call, and that's probably why the stock has held up quite okay during the day, only down around 5%. I mean, if you look at this delivery number, you would have thought that the stock would get crushed way more. Probably a lot of it was already priced in. Probably the fact that they did talk a lot about FSD more recent weeks that has positively affected the stock. But I do still think that the market is waiting for way more information from the earnings report with regards to margins, with regards to the energy side of the business, even though we did get here for the first time a number with regards to energy storage. So they deployed 4,083 megawatt hours of energy storage products in Q1, the highest quarterly deployment yet. That's up 4.2% year over year and around 26% quarter over quarter. Now, if we go back to the investor deck for last quarter, they did say here with regards to energy storage, while we expect deployments will continue to be volatile on a sequential basis, impacted by logistics and the global distribution of projects at any given time, we expect continued growth on a trailing 12-month basis going forward. Of course, throughout the years, you can clearly see here energy storage deployment has been growing and growing quite fast. With regards to the volatility in each and every quarter, I mean, you can clearly see it right here, even though last quarter, yes, it did increase 30% year over year. I mean, it's really not that stable. One quarter it's up, the other one it's down, then up again, then down again. Now, I do want to show you some results from other companies there that could maybe be also a reason why the stock itself is not getting hit as much as most of us have expected. Now, before we do so, if you do enjoy this type of videos, leave it a thumbs up, subscribe if not. We're well on our way to reach 40,000 subscribers. So thank you very much for all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first of all, let's look at BYD, the biggest competitor, let's say, when it comes to China. So BYD hands back top EV seller title to Tesla after Q1 sales decline. Now, what happened here? Well, BYD, China's biggest electric vehicle maker, report first quarter 2024 sales fell 43% compared to the fourth quarter of 2023, handing back the title of world's biggest EV seller to Tesla after winning it last year. BYD sold just over 300,000 EVs in the first quarter of this year, it said in a filing to the Shenzhen Stock Exchange late on Monday, down from a record quarterly high of 526,409 units sold in the previous 3-month period when it surpassed Tesla. Clearly, not just a Tesla problem. Now let's go to another company that does know how to play the Wall Street game, General Motors, GM. If you look at their EV models of their huge list here, overall, they're also down 20%. So, I mean, it's pretty clear right now that GM's CEO is very, very divisive on X, and General Motors doesn't really advertise that much. They should be advertising more and more, right? Because otherwise, why would their numbers be down 20% year over year? It just doesn't make any sense. Maybe it has to do with demand with regards to EV. Maybe it has to do with high interest rates. Just maybe, right? Wouldn't be the craziest thing. Moving on to some analyst comment here, we've got one from Dan Ives here, talks about, well, an unmitigated disaster of a quarter. If you look at the definition of a disaster in a dictionary, you should be finding Tesla's Q1 delivery numbers, according to him. Talks about it's a fork in the road. Let's see whether or not Elon Musk can turn it around, etc., etc. He says here, we continue to believe in the long-term bull thesis for Tesla, but Q1 delivery numbers were an unmitigated disaster, with China the main culprit, and Musk needs to navigate Tesla and investors through this white-knuckle period, as we discussed on Squawk on the Street. Now, I do want to say this, that I hope Tesla learned from their mistakes in previous earnings calls, and they do start to provide some valuable information during those calls. The fact that Tesla doesn't participate in any investor conference throughout the quarters is already quite annoying for analysts because, well, they don't really get that much information throughout the years, but okay. But during the earnings call, usually you should be getting some more information. But we do know that Tesla earnings call are really a special kind of earnings calls. One question gets answered and then Elon and the team just talk between them and talk about stuff that really shouldn't be talked about in an earnings call. Okay, now that we are in a, let's say, difficult period for EVs, for Tesla specifically, I do hope that they will come out with some valuable information. Just like we've seen in the production and delivery numbers, right? It's the first time that they gave us the energy storage product number. Why did they do that? Well, because they knew that without it, it would have been a very, very negative document. So they added a little bit of positivity to that. Great work by the investor relations team. That's exactly what they have to do. Same thing with regards to earnings report. We've been talking about that for a long, long time. If you give us a lot of numbers throughout the year, throughout the quarters, and suddenly you remove a section, remove a metric, you better be damn sure to replace that metric with some other valuable information. Because if you do not, huge red flag. Now, moving on to the next analyst here, it's a pretty long comment, so I've highlighted here a couple of things. This is from Goldman on the Q1 numbers. So they reduced their 475,000 number to 435,000, which in my opinion was still way too high, but okay. They now believe the 2024 deliveries are likely to be lower than the 1.98 million, around up 9.5% year over year. They talk about Tesla preparing themselves for the next growth cycle, targeting the second half of 2025 with regards to a low-cost platform. They do say that ramping of Cybertruck and the new Model 3 could be helpful on that front to reduce the, let's say, negative effect. And we also believe a refreshed version of the Model Y could be a positive driver in the intermediate term. We believe that Tesla should be firm with pricing of the Model 3 and Y in the United States, as the vehicles are attractively priced, particularly with the IRA credits, and our analysis shows that broad-based incremental price cuts would be negative for profits, at least in the short term, although a more entry-level SKU of the Model Y with a lower bill of material could help Tesla to expand volumes while supporting overall margin profits, in our opinion. They do say that in China, because of the degree of competition there, they believe more aggressive with regards to pricing may be necessary. Then talking about FSD, software, they see Tesla as a leader in AI and software technology in the auto space, and we see software and services as a potential meaningful contributor to Tesla's 2030 earnings. The last one here, growth in other segments, including services and energy. Tesla reported that it delivered a record level of storage capacity in Q1 2024 that could drive some, let's say, meaningful margin expansion in the short and long term. Last two things here. One comes from an email I got from a source. I'm still trying to verify if those numbers are very, very accurate, but according to the email I got, Tesla spent $6.4 million on advertising in 2023, and in January alone, Tesla invested close to $420,000. You really can't make this up. An 83 times increase year over year. And all of this goes to digital advertising, not really to the traditional ones. Now, again, I'll have to verify those numbers to be sure that these are accurate, but this is still a very, very tiny budget compared to all the other automakers. I still believe that the public needs some education when it comes to range anxiety, when it comes to EV as a whole. I mean, if you talk to a large enough group of people, you will see that the majority of them that do not own EV all have the same concerns. How do you fix that? Educate them, advertise, launch some campaigns, etc., etc. Or yes, word of mouth is also free advertising. Now, with regards to margins, remember last year margins were already coming down, and yet the stock was going up. Why is that? Why is that nobody talked about that? I'll tell you why, because the stock was going up. But while the stock was going up, you were already seeing some issues with regards to the business, right? Because it makes sense. Price cuts, lower ASPs, lower margins. Yes, it's true that some of the materials, with inflation, some of the prices did come down, so that did help it a little bit. But right now, this year, price cuts not so much. Actually, we had a price increase just at the start of this week for the Model Y. So we might actually be getting some margin stabilization. Yes, there will be a negative impact with regards to Cybertruck, with regards to the refresh Model 3, I know. But you might actually see the margins become a bit better for this year. And yet this year, the stock is doing worse than the year before, where margins were going down way faster than I expect them to go down this year. Nobody complained about that because the stock went up. So, of course, those that only look at the stock only look at the stock. But this year, stock is down, so everything is bad. In my opinion, this is not really a fair way to look at it. And then again, ask yourself the question, 5 years from now, 10 years from now, is Tesla going to be a better business, a more profitable business, or a worse business? If you say it's going to be a worse business, then of course, sell, don't touch this stock. But if you think it's going to be a better business, why not buy the opportunity? I'm not saying it cannot go lower. Actually, we've been talking about that. It can go lower. But will it go as low as the $100 and something we've seen at the end of 2022? In my opinion, no, because back then you had huge selling pressure by Elon to buy X. And so to conclude, yes, Q1 deliveries, horrible numbers. Production, good. Deliveries, horrible numbers. I really hope we're getting way more explanations, way more details given to us in the next earnings call, because to be honest, we deserve it. I'm very bullish on Tesla. I like the team, etc. But yes, I'm getting a bit tired of having to listen to the earnings call and not getting valuable information. Again, I'm here for the long term, but sometimes we deserve to get some information. That's why we're investors, and that's why we're listening to the earnings call. That's about it. Do share your thoughts down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not. I'll see you all in the next one. Bye-bye.